Hello, I'm Pat Cunningham. Welcome back to my series on equity release. Today I want to talk about how do you qualify for a lifetime mortgage. So first of all, of course, you've got to be a homeowner and you've got to be over 55 years of age. In the case of joint applicants, then it's the younger applicant age that's taken into consideration. A younger applicant must be over 55. There's generally no maximum age, although some lenders might specify 90, but generally there's no maximum age for this. So you need to be the homeowner, and the property needs to be held as joint tenants and not tenants in common. Now, that might be news to you about this joint tenants and tenants in common. It's not about renting, but it's the way a property is held. So lenders prefer to have joint tenants, although tenants in common can be accommodated by some lenders. They do prefer it to be joint tenants. Now, don't worry, because joint tenancy is the norm in the UK, so you can check it up, but you probably, if there's two of you, a couple owning the property, you're probably joint tenants. But you'll may need to check that up, or when you speak to your equity release advisor, he'll make sure that he checks that for you. So that's what you need to qualify for a equity release lifetime mortgage. Now the property, minimum property values about £70,000 by most lenders as a minimum, up to £1 million in the UK and £2 million in the London area. Although some lenders have no limits at all, but that's a general thing. And of course, the property's got to be in reasonable nick. I mean, it can't be dilapidated and falling down and holes in the roof. So it's got to be in a reasonable state of repair, because remember, the lender is lending money on this property, and they're not going to be getting their money back for maybe 25-30 years. So they have to make sure that the property is in good order, and in fact you will be held responsible for making sure you do keep it in a good state of repair whilst the mortgage is in place. So the other thing is, can I get one of these mortgages, this lifetime mortgage, if I've already got a mortgage on the property? Or I might have charges on the property from further loans or whatever you might have. And the answer is yes, but all those loans, mortgages, second charges would need to be cleared before the lifetime mortgage came into place. So you could use the lifetime mortgage to clear all those existing debts and charges from the property, and then the balance would be available to you. But the lender would need to take a first charge on the property, and they wouldn't accept any other second charges. So you need to make sure that any existing loans are paid off before you take out this lifetime mortgage. Now, the property can be freehold or leasehold. It's not really a problem. Although on leasehold properties, the length of the lease will be important. The lender wants a significant length of time left on the lease, and the younger you are as an applicant, the more years they would want left on the lease. Now, different lenders have different criteria for their requirement for lease periods. So again, your equity release advisor would be able to tell you exactly what the requirements were and whether you had any problem with the leasehold. The property itself needs to be a standard construction, brick stone with a tiled roof, a stone roof, one of these non-standard constructions which are acceptable, but slates and tiles. So it needs to be a standard specification. Things like holiday homes and second homes and caravans and things like that are, studio flats, for example, are not generally acceptable for a lifetime mortgage. Things like ex-council properties, new build and flats are all considered on their own merits by lenders. So basically, if you've got a house which is fairly not bog standard, but is let me say normal, then there won't be a problem. If you've got issues like flying freeholds and such like, then there may be an issue, but they'll look at that. They'll look at the application and tackle that. And of course, the property would need to be surveyed. Like any other mortgage, a surveyor is sent around on behalf of the lender, who would survey the property to ensure that it was okay to lend those sort of funds on. Now, of course, during the COVID situation, we had surveys carried out remotely. We had desktop surveys being done, and people looking at that type of property and adjacent properties and the history of the property, and actually passing the surveys there. But now we're coming out of this COVID situation. Physical surveys are being reinstated, so you will have a surveyor come round to survey the property, and you'll be, of course, responsible, as I say, for upkeeping the property to keep it in reasonable order. So that's what you need. You need to be over 55 years of age, be a homeowner, be the mortgager, and make sure the debts are cleared or going to be cleared by this lifetime mortgage, and that the property is in good order and of standard construction. And so you shouldn't have any problems. So that's what you need to qualify for a lifetime mortgage. These properties, of course, have to be in the UK. We're only talking about the UK, particularly England. I mean, Scotland have their own sort of regulations. So there we are. That's what you need to qualify for a lifetime mortgage. You need to be over 55 years of age. You need to be the mortgage holder, and the property needs to be of standard construction, and make sure that you can clear any debts that are already on it. So there we are. I hope you found it educational. Please click the subscribe button below. That would help our channel to become more popular and allow more people to see it. And I'll see you on the next video, which is about safeguards and guarantees. So how about a myth buster for today, for those naysayers and the moaners? Okay, here's your myth buster for today. They say, oh yeah, but you get one of these things and you can't do anything to your house anymore. It's not your house, and it is your house. You still own it. You just got a mortgage on it like everybody else. You can still do repairs on the house, you can still paint it, you can still do the garden, do whatever you want to the house, because whatever you're doing to the house is improving it, it's keeping it up to scratch for the lender. He's happy for you to look after it, he wants you to look after it. So life just carries on. So there we are. That's us for today, and I'll see you on the next video. Make sure you press that subscribe button. Thank you very much. Bye.